Time for daily update. I'm gonna go ahead and pull up my chart really quick. Here we go. This was what today looked like. You can see some dashed lines on the left and on the right. This is the entire trading day. And really what we saw today more than anything else was kind of a sideways grind, right? The day started up towards the 23.50 range, touched base down at around 22, and then bounced and just seemed to waffle back and forth, playing around some minor levels of support and resistance. There were a couple of things here that I thought were really notable. The first is this V-type bottom. You can see that the open started with a run down. I'm gonna go ahead and zoom in on that. On these daily updates, I just wanna take a look at the day, kind of dissect it, pull it apart, tell you what I saw. Kind of journal my thoughts here. So this run was pretty much just a solid straight shot down. Very nice. And I know that these runs are going to end typically by the amplitude, or the distance from the trend line to the lows that are found within the downtrend, right? So as these lows get smaller and smaller, and you can see through here the price is in this very tight range as it drops downward, or this tight channel. When the height of that channel decreases, I expect those runs to end at the nearest support or resistance, and that did happen at 22.05. So calling this bottom was pretty easy to do. I thought maybe here we would see the price fall through and find more downside. We did not. Instead, a larger corrective uptrend started, and something in here really caught my attention, and I want to draw, I want to remember this, that I think this might be the first time I've seen the price move up. You see this? The price moved up here, but the implied volatility did not follow suit. Okay, during this rise in the price, the implied volatility actually dropped. And this is a big deal because this correlation between the implied volatility and the price can be a really good indicator of when a reversal is shaping up. And I know that the IV is supposed to be like a lagging indicator, but I've actually found it to be a predictive indicator. And this correlation is how I could have seen, or I guess I did see but refused to accept, the dive that happened late last year. So I've been keeping an eye on this. This was interesting to me to see that the price did flip its correlation with the implied volatility today during this uptrend. Unsurprisingly, the price did rally. That's what tends to happen when we find a bottom in AMC, and we did find a couple of twin peaks here. All right, this is a pretty consistent pattern that we've been seeing in the price. If you can hear my cat, she's scratching on the door. Very annoying. But after that run, we saw a period of consolidation, okay? And I have that shown here in this yellow pennant. And this pennant basically was consolidating the bounce back from that V-type bottom that we saw. So on the intraday, we had a V-type bottom and a handle, and that handle broke down, and that did break the corrective uptrend, right? As you can see here, the price did pass through that green dashed line, and it was about here that I said, hey, you know what? I think if you bought this $22 April 14th put, that this will probably be a profitable trade at this point. I would have bought puts right off of the open, but I didn't because I slept through it. And once I saw this consolidation end to the downside below a level of support, I said, hey, right here on this candle, I'm going to go ahead and say this is probably a good contract to buy. And then the price rose, okay, so holding red for a minute, and then the price slid down. Oh my god, my cat. Can I help you? Okay. Jeez. And then the price broke down into this measured move down. It wasn't really quite a measured move down, but it did follow the 1, 2, 3 phase sort of motion, 1, 2, and 3, as the price broke down, pushed through this level, bounced back up, didn't reach it, and that confirmed a move lower below the next level, and then another corrective phase started, and we had this really awkward grindy sideways action. Now the bottom of this run was pretty easy to find too. I took the height of this first run and then just applied it to the peak of this corrective phase to find a low near there. Here's the annoying culprit, this one. So yeah, that bottom was pretty easy to find, and right here at about this candle I said, hey, this would be a good spot to take profits on that contract. And so if you bought that contract at $165 and sold at $178, you're looking at a $13 gain on a $165 play. That's not too bad. It's not quite 10%, but it's over 5. So that'd be a win. Kind of a weird spot to play a put, right? but that's the way I saw it today. The price did rally into the close, but it was inevitably kind of a bearish day. But if you look at the daily candle, it does look like a reversal. Let's go ahead and open up the daily chart. I got a cat here, and let's have a look at these candles here. Okay, so whoop. This isn't quite a doji, not really. We had an open of 23.48 and a close of 23.31. So more than a dime. Okay, not quite a doji, not quite a hammer. It is red, but this does look like we did find some support. And if you look back, the first peak that preceded the high of that run was about that same price. So there is definitely some support in this area. I want to go ahead though and look at the 15-minute chart and kind of explain why I don't think we're really seeing a bottom there. It's very possible that we do see a bounce for a couple of days, but I don't think it's going to be a continuation of that last run. Let me go to, is it this one? No. First of all, let's zoom out. Second of all, let me get the right chart up. So I think I was doing that on, was it this one? No, couldn't have been this one. Yeah, this charting gets really messy for not paying close attention. Maybe I actually edit this out. Maybe I don't. Maybe I just feel lazy and actually blank is not actually blank. I have so many charts. I'm going to have to fix this. Okay, here we go. So we had this big run up, right? And if you take these retracement levels from that run, like Wilkowski does, you're gonna see that the price did retrace down to this 38.2% retracement level at 25.38, and then it bounced and continued to move further down. And it looks like this is kind of a consolidation, a handle of a V-type bottom. So I have that V drawn out in yellow there with its handle. And it looks like today there might have been an upward breakout, but there's a heavy level of horizontal support and resistance here in this $23 to $24 range, and the price has had a hard time breaking up into that. So I kind of expect this to be something of a false breakout and for the price to move lower down to the target towards 1987. So that's what I have for my daily update video. The cat's been a hassle. I'm not gonna edit this, so that's what I got. And this is my cat as I'm trying to get this video, online. There she is. How you doing? Happy as a clam.